Welcome to the Modern Investor's Handbook. This book is your guide to understanding how money grows in today's fast-changing world. We live in an age where information moves faster than ever before. One click can buy a stock, one post can move a market, and one idea can change your entire financial future. But with all this speed comes confusion. Many people rush into investing without a plan. They chase trends, follow social media advice, and panic when markets fall. They think investing is about luck or timing. In truth, it is about knowledge, patience, and discipline. Modern investing is not just about numbers on a screen. It is about building habits that lead to financial freedom. It is about learning how to think like an investor every single day. When you think like an investor, you see money differently. You stop seeing it as something to spend and start seeing it as something to grow. In the past, investors relied on newspapers and long waits for updates. Today, we have tools that give us power and instant access. But this power can be dangerous without understanding. Technology makes it easier to invest, but also easier to make mistakes. That is why this book exists, to help you build a strong foundation before chasing opportunity. Throughout this handbook, you will learn the timeless principles that guide all successful investors. You will also see how those old lessons fit perfectly in our modern world. Because while technology changes, human nature does not. Emotions like fear and greed are still the biggest barriers to wealth. Learning to control them is the first real step toward financial success. The journey you are about to take will help you see investing in a new light. You will learn not only how to grow your money, but also how to grow your mind. Because becoming a modern investor means becoming a lifelong learner. Each chapter will take you deeper, from the right mindset to real strategies for growth. And it all begins with the most powerful step of all. Before you invest your money, you must invest in your thoughts. You must learn how a true investor thinks and acts. So let us begin with the foundation of everything that follows. Chapter 1. The Mindset of a Modern Investor. Every great investor begins with a simple truth. Your results come from your mindset. You can have money, tools, and information, but without the right way of thinking, you will lose direction. The modern investor's journey does not start with charts or apps. It begins with how you see money, risk, and time. A modern investor does not follow the crowd. They think independently, study carefully, and make calm decisions. Most people fail at investing not because they lack intelligence, but because they lack patience and emotional control. They get excited when the market rises and afraid when it falls. But smart investors do the opposite. They stay calm when others panic, and they act wisely when others rush. The foundation of the investor's mind is discipline. It means following a clear plan, even when emotions tell you to do something else. When you build discipline, you protect yourself from fear, greed, and noise. Every headline will try to make you react, but your job is to stay steady. Investing is not about reacting, it is about preparing. Confidence is another part of the right mindset. Confidence does not mean being certain of the future. It means trusting your process and your principles. No one knows what will happen tomorrow, but with a calm mind and clear rules, you can face any change. Confidence grows from experience, and experience grows from learning, including mistakes. A modern investor also thinks long-term. They understand that real wealth is built over years, not weeks. Short-term gains are exciting, but lasting success comes from time, patience, and consistency. It is better to grow slowly and surely than to rise quickly and fall hard. When you focus on long-term growth, small market drops stop scaring you. You begin to see them as chances to buy great assets at better prices. Another quality of the modern investor is curiosity. They never stop learning. They read books, study history, and observe people. They understand that markets are made of human behavior. When you understand how people think, you understand how markets move. Knowledge gives you calmness because you know what truly matters and what is just noise. Humility is also a strength. Even the greatest investors make mistakes. Accepting that you can be wrong keeps you open-minded. When you admit you do not know everything, you avoid taking blind risks. The market rewards those who are humble enough to learn and bold enough to act. A modern investor must also protect their peace of mind. Constant news and price updates can create stress and confusion. You do not need to check your portfolio every hour. Let your money work quietly while you focus on improving yourself. Wealth grows best when you give it time and space. The final part of a strong mindset is purpose. Ask yourself, why do you want to invest? Is it for freedom, family, or the ability to help others? When your goal is clear, your patience grows. You stop chasing every trend because you know where you are going. Purpose gives direction, and direction gives strength. The mindset of a modern investor is a blend of old wisdom and new awareness. It is calm in chaos, confident in uncertainty, and patient in a world of speed. When you master your thoughts, your investments begin to follow. Your money becomes a reflection of your mind, steady, growing, and focused on the long view. So before you move to the numbers and strategies, remember this: the mind is your most valuable asset. If you learn to manage your emotions, you will always find opportunities, even in hard times. And now that your mind is ready, it is time to build your foundation of knowledge. Let us move forward and discover why knowledge is your real capital. Chapter 2. Knowledge is your real capital. Money alone is not power. Knowledge is what gives money its direction and purpose. Without knowledge, even a large fortune can disappear quickly. But with the right understanding, even small savings can grow into something great. That is why every modern investor must treat learning as their first investment. Before you buy any stock, property, or digital asset, invest in your education. Understand what you are putting your money into. When you know how something works, you are less likely to be fooled by emotion or hype. Many people lose money not because of bad luck, but because they did not take time to learn. They follow the noise of the crowd instead of the voice of reason. Knowledge gives you the ability to see clearly when others are confused. It helps you separate real opportunities from risky traps. When you understand the value behind what you own, short-term price drops no longer scare you. You see beyond the surface. You think like a business owner, not a gambler. Learning never ends in the world of investing. Markets change, industries evolve, and new tools appear every year. But the core principles remain the same. Study before you act, and think before you spend. Even a small piece of information, learned at the right time, can save you from a big loss. In the modern world, ignorance is the most expensive thing you can afford. Reading is one of the strongest habits of all successful investors. Books are your quiet mentors. They teach you lessons that others learned through decades of experience and failure. When you read, you borrow wisdom without paying the price of mistakes. Make reading about money, psychology, and human behavior a part of your daily life. But knowledge is not only about books, it also comes from observation. Watch how people spend, save, and invest. Notice what businesses are growing and what trends are fading. The world itself is a classroom, and every transaction teaches something about value. In today's digital age, information is everywhere, but wisdom is rare. The internet can make you smarter or more confused, depending on how you use it. Do not believe everything you see online. Check facts, question sources, and always look for the why behind every claim. True investors think deeply before trusting what they hear. Another part of knowledge is self-awareness. Know your own strengths and limits. If you do not understand something, do not invest in it yet. Learn first, act later. It is better to miss one opportunity than to lose everything by guessing. Patience in learning will always reward you more than rushing into action. Knowledge also builds confidence. When you understand what you own, you can stay calm during market storms. You will not panic when prices drop or news headlines scream fear. Instead, you will remember your research, your plan, and your goals. Confidence that comes from knowledge is stronger than emotion that comes from luck. Keep in mind that the best investors are always students. They stay curious, humble, and hungry for understanding. They do not pretend to know everything, but they keep learning every day. That is how they grow, step by step, insight by insight, Knowledge is the invisible force that guides every wise decision. So before you look for profits, look for wisdom. Before you chase returns, chase understanding. When you have enough knowledge, the right decisions will feel natural, not forced. And with each wise choice, your wealth will begin to grow steadily and safely. Now that you know the importance of knowledge, it is time to take your first real step. You will see how even the smallest beginning can lead to something powerful. Because in the next part of our journey, you will discover the power of small beginnings. Chapter 3: The Power of Small Beginnings. Every big success story starts with something small. Every great investor once began with little more than a dream, a few coins, and a belief in growth. In the world of investing, size does not matter as much as consistency. What matters most is the habit of starting, even when the beginning looks small. Many people wait until they have more money to invest. They say they will begin when their income grows, or when the market feels right. But the truth is, those who wait never really start. The secret of wealth is not waiting for the perfect moment, but making the moment perfect by starting now. Small beginnings create big habits, and habits create results. When you start small, you make fewer mistakes that cost you dearly. You learn safely and grow wisely. A beginner who invests a small amount learns the same lessons as someone with much more. How markets move, how emotions affect decisions, and how patience pays off. The only difference is that the lessons are cheaper and the wisdom lasts longer. The beauty of small beginnings lies in the power of compounding. Compounding is the quiet magic of growth over time. It is when your money earns returns, and those returns start earning their own returns. It may look slow at first, but with time, it becomes unstoppable. A small seed, given sunlight and care, becomes a forest. Your first investment works the same way. Most people underestimate time. They think one day or 1 month does not matter, but every small action adds up. When you invest regularly, even in tiny amounts, you train your mind to focus on growth, not spending. You turn money from a tool of comfort into a tool of creation. Small beginnings also teach humility. They remind you that wealth is earned, not gifted. They build respect for the process of saving, learning, and growing. You appreciate your progress more when you know how much discipline it took to reach it. That respect becomes the root of financial wisdom. Starting small also removes fear. When the stakes are small, mistakes do not crush you. You can experiment, learn, and adjust without losing confidence. By the time you handle larger amounts, you already have the experience that keeps you calm. It is not the amount of money that makes you ready. It is the habit of handling it wisely. Remember, money is like a plant. It grows when you nurture it regularly. If you water it once in a while and then forget about it, it withers. But if you give it steady care, even in small amounts, it flourishes. This is the principle behind successful investing. Steady effort over time. There will be moments when progress feels too slow. You might look at your results and wonder if it is worth it. That is when you must remind yourself, even the tallest tree was once a seed buried in silence. Growth is invisible in the beginning, but powerful in the end. Patience is what turns small efforts into big outcomes. Every great investor honors their small start. They never forget where they began. That memory keeps them grounded and grateful. It reminds them that success is built one small choice at a time. Your first dollar, your first investment, your first bit of effort, each one is a brick in the wall of your future freedom. So do not wait for a perfect amount to begin. Start with what you have. Start with what you know. Start today. Because the greatest strength of the modern investor is not wealth. It is the courage to begin. Now that you understand the power of beginning small, it is time to learn what you are building toward. To grow wisely, you must know what truly counts as an asset and what silently drains your wealth. Let us move forward and explore understanding assets. Chapter 4: Understanding Assets. To grow wealth, you must first understand what truly builds it. Every investor must learn the difference between an asset and a liability. This is one of the simplest ideas in finance, but it is also the most powerful. An asset is something that puts money into your pocket. A liability is something that takes money out of it. If you master this one lesson, You can change your entire financial life. Many people believe that owning expensive things makes them rich. They buy big cars, designer clothes, and fancy gadgets. These things might look like signs of wealth, but most of them are not assets. They do not grow in value. They lose worth over time and cost more to maintain. Real wealth is not about what you show. It is about what quietly grows. An asset works for you even when you sleep. It could be a stock that pays dividends, a property that earns rent, or a business that makes profit. It could even be your own skill that earns income again and again. Anything that builds future value is an asset. Your goal as an investor is to collect and grow as many assets as possible while reducing your liabilities. Understanding assets changes how you see money. You stop asking, "What can I buy?" and start asking, "What can I build?" You begin to view every dollar as a worker. Each dollar should have a job to earn more dollars. If your money is not working, it is being wasted. Knowledge itself is also an asset. The time you spend learning, reading, and understanding is not wasted time. It is an investment that pays you for life. When you build mental assets, financial assets naturally follow. Because an educated mind will always find opportunities. Not all assets look the same. Some are visible, like real estate or stocks. Others are invisible, like relationships, reputation, and experience. A good network of people can open doors to opportunities that money cannot buy. A trusted name in business becomes a valuable asset that attracts success. So never underestimate the power of intangible wealth. The modern investor understands that balance is key. You do not need to own many things to be rich. You just need to own the right things. It is better to have a few strong assets that grow than many weak ones that shrink. Quality always beats quantity in the long run. To identify good assets, ask yourself a few questions. Does it grow in value over time? Does it bring regular income or benefit? Does it make your life simpler, stronger, or more stable? If the answer is yes, it is likely an asset. If it adds stress, debt, or constant cost, it is likely a liability disguised as success. The smartest investors are builders, not buyers. They create assets, a business, an online platform, or a creative product. They build systems that keep earning even when they rest. This is how true financial freedom begins. Not by working harder, but by letting your assets work for you. Once you clearly see the difference between what grows your wealth and what drains it, you will begin to live differently. You will start saving to invest, not just to spend. You will feel proud of ownership that produces value, not just appearance. And with time, your collection of assets will become your foundation of independence. Understanding assets is like planting trees. You may not enjoy the full shade today, but one day you will sit beneath what you once nurtured. Each asset you build is a tree that protects your future and feeds your freedom. Now that you know what to build, the next question is, how to build it wisely. You cannot rely on one tree alone to give you shade. That is why in the next chapter, you will learn the art of spreading your investments smartly. Let us move forward and discover diversify, but stay focused. Chapter 5. Diversify, but stay focused. One of the oldest pieces of investing wisdom says, "Do not put all your eggs in one basket." This means that you should never depend on a single source for your money to grow. Even the best idea can fail, and even the strongest company can face hard times. That is why diversification is a key part of every modern investor's plan. Diversification protects you from the unknown. It spreads your risk across different kinds of assets so that one bad event cannot destroy everything. When one investment goes down, another may go up. This balance keeps your portfolio stable and your mind peaceful. It is like building a team of strong players instead of relying on just one star. There are many ways to diversify. You can invest in different industries such as technology, healthcare, and energy. You can also include different types of assets like stocks, bonds, real estate, and digital investments. Some investors even hold a little cash for safety and flexibility. The goal is to create balance, not confusion. But here lies the secret. Diversify wisely, not blindly. Many people think diversification means owning as many things as possible. That is a mistake. Too many investments can scatter your attention and reduce your control. Owning 50 things you do not understand is riskier than owning 5 you know deeply. This is why the best investors combine diversification with focus. Focus means you know what you own and why you own it. You choose quality over quantity. You study your investments and build conviction. When markets become uncertain, your focus keeps you calm because you understand the value behind your choices. Diversification keeps you safe, but focus keeps you strong. Imagine a farmer planting different crops in his field. He does this because he knows that if one crop fails, another will succeed. But he also learns everything about the soil, the season, and the plants he grows. That is what a wise investor does. Spreads the effort, but masters the process. Diversification also gives you freedom. When your money is spread across many sources, you do not depend on one job, one company, or one market. Even if something goes wrong in one area, your other assets continue to support you. This is how true financial security is built, through multiple roots that feed your financial tree. However, do not let diversification become an excuse for distraction. It is easy to get lost in constant buying and selling, chasing new ideas without purpose. Each investment should fit your bigger vision. Every move must connect to your long-term plan. Remember, diversification is protection, not a playground. To diversify and stay focused, follow a simple rule. Understand before you invest. If you cannot explain how an asset works, it does not belong in your portfolio yet. Learn first, then act. Start with what you know, and slowly expand your circle of competence. This way, every part of your portfolio becomes both strong and meaningful. Over time, diversification and focus together create a shield of strength. They allow you to grow with confidence, adapt to changes, and survive storms. When others panic over one failing investment, you will stand firm because your foundation is wide and wise. In the end, the modern investor learns that balance is not about owning everything. It is about owning enough of the right things. A well-diversified, well-understood portfolio is like a well-built bridge, strong, flexible, and able to carry you safely to your goals. Now that you have learned how to build a balanced foundation, it is time to explore the next great power shaping our financial world: technology. The next chapter will open the doors to how modern tools and digital systems are transforming investing. Let us step forward and understand the digital revolution. Chapter 6: The Digital Revolution. The world of investing has changed more in the past 2 decades than in the previous 100 years. The rise of digital technology has opened the doors of opportunity wider than ever before. Today, anyone with a smartphone and an internet connection can invest, learn, and grow wealth from anywhere in the world. This is the power of the digital revolution. It has broken down the walls that once separated big investors from ordinary people. In the past, only professionals with access to expensive tools and inside knowledge could understand markets. But now, digital platforms provide instant access to real-time data, research, and analysis. You no longer need to rely on others to make decisions for you. The power is in your hands. Apps, online courses, and global communities make it possible to learn investing step by step. The digital world has turned information into wealth. This revolution is not just about access. It is about speed, efficiency, and opportunity. In seconds, you can buy a share, sell a bond, or invest in an international company. You can compare hundreds of options and make informed choices faster than ever. But this speed also brings a challenge. Easy access can tempt you to act too quickly. True investors use technology as a tool, not as a toy. Technology has also created new types of assets. Cryptocurrencies, digital funds, and online businesses have changed what it means to invest. A teenager can start an online brand. A small investor can buy a fraction of a company or property through digital platforms. The world of opportunities keeps expanding. However, not every shiny new thing is a good investment. The digital age rewards knowledge and discipline. Those who understand technology and stay grounded will thrive. Automation and artificial intelligence are also shaping the new world. Smart systems can help you analyze data, predict trends, and balance your portfolio. But remember, no machine can replace human wisdom. Technology should serve your plan, not control it. The goal is to use digital tools to make better decisions, not to become dependent on them. Social media has also changed how people think about money. You can learn from the best minds in finance, listen to global experts, or join groups of investors with similar goals. But there is a danger too. Many voices online talk about quick success and overnight wealth. Be careful what you believe. In the digital world, wisdom is not in loud claims, but in quiet understanding. The digital revolution has given everyone the chance to be a part of the financial world. It has made investing more open, faster, and more flexible. But the foundation remains the same. You must think clearly, stay patient, and focus on long-term growth. Technology is your bridge to opportunity, but your mindset is still the driver. In this new era, the smartest investors are not those who chase trends, but those who use digital tools to strengthen timeless principles. Learn, adapt, and stay focused. The future belongs to those who combine wisdom with technology. In the next chapter, we will explore one of the oldest and most powerful secrets of investing that even the digital world cannot replace. It is the virtue that builds empires and wealth alike: patience. Chapter 7. The value of patience. In the modern world, everything moves fast. Messages, trades, and news spread across the world in seconds. But in investing, speed is not the secret to success. Patience is. The ability to wait calmly, to hold when others rush, is what separates the wise from the restless. True wealth grows slowly, like a tree that takes years to bear fruit. Patience in investing means understanding that results take time. When you invest in a company, you are not just buying a price, you are buying a business. Businesses grow, evolve, and face challenges. The value of your investment follows this natural rhythm. A patient investor does not panic when prices fall or get too excited when they rise. Instead, they stay focused on the long-term picture. Many people lose money not because they choose the wrong investment, but because they act too soon. They buy when everyone is buying and sell when fear takes over. They try to time the market, guessing what will happen next week or next month. But no one can predict short-term movements with certainty. The patient investor does not need to. Time is their best friend. Compounding, the magic of multiplying returns, works only with patience. Each year, your money earns more money. But this miracle needs time to grow. The longer you stay invested, the more powerful compounding becomes. It rewards those who wait and punishes those who rush. Think of it like planting seeds. You cannot dig them up every day to check if they are growing. You must water them, care for them, and let time do its work. In the age of instant results, patience feels old-fashioned. But the truth is timeless. Every great investor, from Warren Buffett to Charlie Munger, has built success on patience. They spend time studying, waiting for the right opportunity, and holding their best investments for years. They understand that markets will rise and fall, but good businesses will keep growing over time. Patience is not about doing nothing. It is about doing the right thing at the right time, and then allowing your decision to mature. It means preparing, learning, and observing, while others act out of emotion. It also means not getting distracted by market noise. Every day, headlines shout about crisis or opportunity. A patient investor listens, but does not react. They know that the market's mood changes daily, but true value takes time to reveal itself. Being patient also helps you stay calm. Emotional control and patience go hand in hand. When you can wait, you can think clearly. You are less likely to make decisions out of fear or greed. You focus on your goals, not on what others are doing. You understand that slow progress is still progress. In the digital age, where trades happen in seconds, patience becomes even more valuable. Technology gives you speed, but patience gives you power. Use the tools of the modern world, but let your mindset remain timeless. Remember, you do not need to win every day. You only need to win in the long run. The best investors do not chase every opportunity. They wait for the right one. They know that sometimes the hardest thing to do is nothing at all. Patience is not weakness. It is quiet strength. It allows you to grow with confidence while others burn out in haste. In the next chapter, we will explore the twin of patience, another skill that keeps investors strong through ups and downs. It is the power to remain calm when emotions rise and markets shake. Emotional control. Chapter 8. Emotional control. Every investor faces moments of fear and excitement. Prices rise and fall, news changes by the hour, and emotions swing between hope and panic. The ability to stay calm in these moments is what defines emotional control. It is the shield that protects your decisions from being driven by feelings instead of reason. Without it, even the best plan can fall apart. Emotions are natural. They are part of being human. But when it comes to investing, emotions can become your biggest enemy. Fear makes you sell too soon. Greed makes you buy too fast. Both lead to mistakes. A modern investor must learn to manage these feelings, not by ignoring them, but by understanding them. When you know why you feel a certain way, you can choose not to act on it. Markets are like mirrors. They reflect the emotions of millions of people at once. When everyone feels confident, prices rise. When fear spreads, prices fall. But the truth is, value does not change as quickly as emotions do. A good company does not become bad just because the market is afraid. Emotional control allows you to see beyond the crowd and trust your judgment. When the market crashes, panic spreads quickly. Many investors rush to sell, afraid of losing more money. But those who remain calm often find the best opportunities in such times. Great investors like Warren Buffett remind us to be fearful when others are greedy, and greedy when others are fearful. This means staying calm when others lose control, and thinking clearly when emotions cloud the air. Emotional control also means knowing yourself. Every person reacts differently to risk and loss. Some people can handle market swings easily. Others feel stress at every change. The key is to invest in a way that lets you sleep peacefully at night. If your investments make you anxious all the time, you are likely taking on too much risk. A calm mind makes better decisions. Technology and social media can make emotional control harder. You see people showing their success, quick profits, and confident predictions. It is easy to feel left behind or afraid of missing out. But remember, most people share their wins, not their losses. Investing is not a race. It is a personal journey. The only comparison that matters is how far you have come, not how others are doing. To develop emotional control, create rules for yourself. Decide in advance how much risk you can take. Set long-term goals and stick to them. Do not check prices every hour. The more you watch the market, the more emotions you invite. Learn to focus on the bigger picture. You are not just trading numbers, you are building your future. It helps to study history too. Every generation faces moments of panic, crisis, and recovery. Markets always move in cycles. What goes down often comes back stronger. When you understand this pattern, you stop reacting emotionally. You begin to trust the process and focus on the long-term trend. Emotional control is not about being cold or unfeeling. It is about being steady. It is about responding instead of reacting. When you feel fear, ask yourself what has really changed. When you feel greedy, question if the excitement is justified. The goal is to make choices based on logic, not impulse. In the end, your emotions can either guide you or mislead you. The choice is yours. The modern investor learns to use emotions as signals, not orders. Fear can remind you to stay careful. Excitement can remind you to stay humble. Balance both, and you will stay on course. In the next chapter, we will see how mistakes, when handled wisely, become powerful teachers. Every investor makes them, but only a few turn them into lessons. Let us explore how learning from mistakes shapes the journey toward mastery. Chapter 9. Learn from mistakes. Every investor, no matter how smart or experienced, makes mistakes. The difference between those who grow and those who give up lies in how they respond. Mistakes are not the end of your journey. They are lessons that guide you toward better choices. In the world of investing, every wrong step carries a hidden gift of wisdom, if you are willing to learn. When you lose money or make a bad decision, the first reaction is often frustration or regret. You might feel angry at yourself or the market, but blaming or denying will not help. The wise investor pauses, reflects, and asks questions. What did I miss? What could I have done differently? This process turns pain into progress. Mistakes are like mirrors. They show you where your thinking needs clarity. Many new investors fear making mistakes so much that they never start. But avoiding failure also means avoiding growth. No one becomes skilled without experience. Even the best investors in history have stories of failure. Warren Buffett bought companies that did not work out. Charlie Munger faced business setbacks. Yet both became legends because they learned and moved forward. Every mistake sharpened their understanding. The market is a great teacher, but it charges a fee. Sometimes that fee is a small loss. Other times it is a bigger one. The key is to pay once and learn forever. If you repeat the same mistake, the lesson becomes more expensive. So, after every decision, review what happened. Write it down. Keep a record of your choices, your reasons, and the results. Over time, you will see patterns that reveal your strengths and weaknesses. Some mistakes come from emotion. Acting out of fear or greed often leads to regret. Others come from lack of knowledge or overconfidence. The cure is awareness. The more you understand yourself and the market, the fewer careless mistakes you make. But do not aim for perfection. Aim for progress. Even small improvements, repeated over time, lead to mastery. It is also important to forgive yourself. Investing is a journey of constant learning. Beating yourself up for every loss will only slow you down. Instead, treat mistakes as teachers. Ask what they are trying to show you. Maybe you need more patience, better research, or clearer goals. Each mistake points to an area where you can grow. Learning from mistakes also builds humility. It reminds you that the market is bigger than any one person. No one can control it or predict it completely. Accepting this truth helps you stay calm and flexible. When you stop trying to be always right, you become open to learning. And that is how you get better. Technology and data can help, but self-reflection remains the most powerful tool. Take time to think, not just react. If an investment goes wrong, do not rush to fix it by making another quick move. Sit with it. Understand it. Then plan your next step with a clear mind. The market rewards those who think, not those who panic. Learning from mistakes also builds confidence. When you survive a loss and come back stronger, you prove to yourself that you can handle challenges. Each lesson makes you wiser and more prepared for the future. Over time, this confidence becomes your quiet strength. You stop fearing mistakes because you know how to turn them into growth. Remember, success is built on a foundation of failures understood. Every great investor has a history of missteps behind their wisdom. The goal is not to avoid falling, but to rise wiser each time you do. In the next chapter, we will look at the most important investment of all. It is not a stock, a company, or even an asset. It is you. Investing in yourself is the key that unlocks every other door in your financial journey. Chapter 10. Investing in yourself. Before you invest in any company, stock, or digital asset, you must first invest in the most important asset you will ever own. Yourself. Every skill you build, every book you read, and every habit you form adds value that cannot be taken away by market crashes or economic changes. The modern investor understands that self-investment is the foundation of every lasting success. Investing in yourself means building your mind, your skills, and your character. The first and most powerful form of self-investment is knowledge. The more you know, the better your decisions become. In the age of information, learning is easier than ever. You can take online courses, listen to audiobooks, or study the habits of great investors. The key is to stay curious. The more you learn, the more opportunities you begin to see. But knowledge alone is not enough. You must also learn how to think. The world is full of information, but wisdom is rare. Develop the ability to separate fact from noise. When you think for yourself, you stop following trends blindly. You begin to see patterns that others miss. This is how you turn knowledge into power. Self-investment also means taking care of your health and mindset. A sharp mind lives in a healthy body. Regular exercise, good sleep, and a calm attitude are not luxuries. They are tools for success. When you are tired or stressed, you make poor decisions. When you are calm and focused, you see clearly. The best investors treat their mind and body like the foundation of a house. Strong foundations create stable growth. Your relationships are another form of self-investment. Surround yourself with people who inspire, challenge, and teach you. Learn from mentors who have walked the path you want to take. Share ideas with others who are serious about growth. Avoid negativity and distractions. The people you spend time with shape your mindset, and your mindset shapes your future. Time management is also part of self-investment. Every hour you waste is an opportunity lost. Successful people guard their time like treasure. They know that small, focused efforts each day compound into big results over the years. Spend time learning, improving, and building. Do not waste energy on things that do not serve your goals. Investing in yourself can also mean developing new income skills. Learn how to sell, communicate, write, code, or analyze. The more skills you have, the more value you can offer to the world. Each skill is like planting a new tree that can bear fruit later. You do not have to master everything, but you should always be improving something. The money you spend on education, growth, or personal improvement is never wasted. It may not show instant results, but it pays the best returns over time. Unlike investments in the market, self-investment compounds forever. Every new skill you gain opens doors that stay open for life. Confidence is another reward of self-investment. When you trust your abilities, you stop doubting every move. You can take risks wisely because you know you can handle challenges. Confidence does not come from luck, it comes from preparation. The more you prepare, the more fearless you become. The modern investor sees self-investment as the heart of financial freedom. Before chasing returns, they build a strong base of knowledge, habits, and discipline. This is what makes success last. Without personal growth, money alone cannot create peace or purpose. Remember, the world is always changing. Technology, markets, and trends will come and go. But your mind, your skills, and your wisdom will always stay with you. The more you invest in yourself, the better you can adapt, grow, and lead. In the next chapter, we will explore a timeless principle that keeps life and investing both clear and powerful. It is the art of keeping things simple. Simplicity is not the opposite of intelligence. It is the highest form of it. Chapter 11. The Power of Simplicity. In a world filled with data, noise, and constant updates, simplicity has become a rare strength. Many people believe that successful investing must be complex. They think more analysis, more charts, and more news mean better results. But the truth is the opposite. The best investors know that simplicity is not weakness, it is clarity. Simplicity helps you focus on what truly matters and ignore what does not. Simplicity begins with understanding your goals. You do not need to chase every new opportunity or own every type of investment. You just need a plan that matches your values and your timeline. The modern investor defines what success means to them and builds around that vision. When your purpose is clear, your decisions become simple. Many investors make things complicated because they believe complexity equals intelligence. They fill their portfolios with too many assets or trade too often, but this often leads to confusion and stress. Simplicity means focusing on quality, not quantity. A few good investments held for a long time can outperform dozens of quick trades. Charlie Munger once said that you do not have to be brilliant to succeed, only disciplined. Simplicity is that discipline. It keeps you calm when others panic and focused when others are distracted. It allows you to stay on course without being pulled in 100 directions by every market rumor. Simplicity also means trusting time. When you invest with patience, you do not need to constantly change your strategy. You can let your investments grow naturally. Markets go up and down, but the long-term trend rewards consistency. By keeping things simple, you save energy, reduce mistakes, and build lasting confidence. In the digital age, simplicity is even more powerful. Technology can make things faster, but it can also make them more confusing. Every day there are new apps, new coins, and new ways to invest. The modern investor uses technology wisely, but avoids the trap of constant distraction. You do not need to know everything. You just need to understand what fits your goals. Simplicity is not about avoiding learning. It is about cutting away what does not add value. When you learn, ask yourself if the information helps your decision or just adds noise. Simplicity creates focus, and focus creates progress. The best investors spend their energy on a few important things and ignore the rest. A simple plan also helps you stay emotionally strong. When your system is clear, you worry less about daily market moves. You know what you own, why you own it, and how long you plan to hold it. This removes uncertainty and builds peace of mind. Complexity invites doubt. Simplicity builds trust. Even the greatest businesses in the world succeed through simple ideas executed well. They solve basic human needs and do it better than others. Investing is no different. Find what works, understand it deeply, and stick with it. Do not get lost in endless strategies or shortcuts. Simplicity also brings freedom. When your investments are easy to understand, you spend less time managing them and more time living your life. You are not constantly checking screens or chasing predictions. Instead, you can focus on growth, learning, and happiness. To build a simple strategy, ask yourself 3 questions. What do I want to achieve? How long do I have? What can I understand clearly? If your answer is honest, your plan will naturally become simple and effective. Simplicity is timeless. It guided investors a century ago, and it will guide them a century from now. In the end, it is not how much you know, but how clearly you think that decides your success. In the next chapter, we will look at how this clarity leads to the next great strength of modern investors, the ability to think far ahead. The long-term vision turns small actions today into great results tomorrow. Chapter 12. The Long-Term Vision. Every great investor sees beyond the moment. They understand that real success takes years, not days. The long-term vision is what separates those who chase quick profits from those who build lasting wealth. It is the mindset of patience, planning, and purpose. In the fast-moving digital world, where everything changes every second, the ability to think long-term has become a rare and powerful skill. The long-term vision begins with belief. You must believe in the process, in your plan, and in the future you are building. Without this belief, every small challenge feels like failure. Markets will rise and fall. Some years will test your patience. But those who stay focused on the bigger picture always come out stronger. Time is the greatest friend of the disciplined investor. Thinking long-term helps you see value where others see noise. When a stock price drops, the short-term thinker panics. But the long-term investor asks, has the business truly changed? Or is this only a moment of fear in the market? This calm perspective allows you to buy when others sell and to hold when others doubt. The power of compounding works only with time. Each year, your returns build on the previous ones. The more time you give your investments, the faster they grow. This is the quiet magic that creates wealth. It is not about making the biggest profit in one trade. It is about staying invested long enough for your money to grow naturally. A long-term vision also gives you emotional peace. You stop worrying about daily price movements. Instead of reacting to every bit of news, you focus on progress over years. You understand that short-term drops are just part of the journey. Like a river, the path may twist and turn, but the direction remains forward. The modern world often encourages short-term thinking. People want quick results, fast money, and instant rewards. But the truth is, anything that grows fast also fades fast. Real growth takes time, effort, and consistency. The long-term investor is not looking for excitement. They are building stability. A clear long-term vision starts with defining your goals. What are you investing for? Financial freedom, security, or legacy. Once you know your destination, every step becomes easier. You can measure progress by your direction, not by how fast you move. Even small steps, taken consistently, lead to great distances over time. Discipline is the key to maintaining long-term vision. There will be times when you are tempted to quit, change your strategy, or chase something new. In those moments, remind yourself why you started. Revisit your goals. Look at how far you have come. Long-term success is not about perfection. It is about persistence. History has shown that long-term thinkers always win. Markets have faced wars, recessions, and crises, yet they have always recovered and grown. Those who stayed patient through hard times saw their investments multiply. Time rewards those who trust it. Long-term vision also applies beyond money. It shapes how you grow as a person. Learning, health, and relationships also compound over time. When you think long-term, you build habits that create lasting happiness, not just temporary pleasure. In the digital age, where information moves faster than thought, long-term thinking becomes your anchor. It keeps you steady when others drift. It helps you see through uncertainty and find peace in progress. In the next chapter, we will look at how this vision expands into one of the most practical and empowering ideas for the modern investor: building multiple streams of income. Because when you think long-term, you realize that true freedom comes not from one source, but from many that work together for your future. Chapter 13. Building multiple streams of income. Relying on one source of income is like standing on one leg. You can balance for a while, but one small push can knock you down. The modern investor understands that true financial freedom comes from having many legs to stand on, multiple streams of income. Each stream supports the others, giving you stability, growth, and peace of mind. In the past, people depended only on their job for income. But the world has changed. Technology, creativity, and access to global markets have opened countless new doors. Today, you can build income from investments, businesses, digital work, or even from your skills and knowledge. The more streams you build, the stronger your foundation becomes. The first step to building multiple streams of income is to understand your strengths. Everyone has something they can offer. Maybe you are good at writing, teaching, designing, or analyzing. Your skills are seeds that can grow into income sources. The key is to use what you already know and expand from there. Investing is one of the most common and powerful income streams. When you invest in stocks, bonds, or real estate, your money starts working for you. This is called passive income. You earn even when you are not actively working. Over time, as your investments grow, your income also grows. But remember, every stream needs care. You must keep learning and monitoring your progress. Another stream comes from side businesses or digital projects. The internet allows anyone to create and sell something to the world. You can start a small online store, build a blog, teach a course, or offer services. Even if it starts small, it can grow with time. The goal is not to replace your main income immediately, but to create additional sources that add strength to your financial life. Knowledge sharing is another growing source of income. If you are good at something, teach it. People around the world are willing to pay for guidance, education, and expertise. Online teaching, coaching, and content creation have become new ways to earn while helping others. The more value you provide, the more income your knowledge can generate. Creating multiple streams of income also builds financial security. If one source slows down, others can support you. This gives you freedom and confidence. You are no longer dependent on a single paycheck or client. You have control over your future. However, building many streams does not mean chasing too many things at once. Focus on one at a time. Build it until it becomes stable. Then move to the next. Quality matters more than quantity. Each stream should fit your skills, goals, and lifestyle. The power of technology makes this process easier. Automation, online tools, and digital platforms allow you to manage different income sources efficiently. But discipline is still required. Without focus and patience, even the best opportunities fade. Treat every stream like a small plant. Water it, give it time, and let it grow naturally. Remember, financial freedom is not about working endlessly. It is about building systems that work for you. Multiple streams of income give you options. They allow you to live on your terms, take risks, and pursue what matters most to you. When your income comes from different directions, you stop worrying about small setbacks. You feel secure because your life is supported by many pillars, not just one. This is the essence of modern investing, building a life where money flows steadily, not just from one source, but from many that align with your values and goals. In the next chapter, we will explore how true wealth grows not only through money, but through purpose. Giving back and helping others create meaning in your success. Because the richest life is not just about what you earn, but about how much you contribute to the world around you. Chapter 14. Giving Back and Growing. There's a stage in every investor's journey when the numbers on the screen or the size of the bank balance stop being the main motivator. True wealth isn't just about having more. It's about being more and doing more with what you have. Giving back isn't only an act of charity, it's one of the smartest and most fulfilling investments you can ever make. When you give, you multiply not only your impact, but also your sense of purpose. Many of the world's greatest investors, Warren Buffett, Charlie Munger, Ray Dalio, and others, understand this deeply. They built their fortunes through patience, discipline, and focus, but they found meaning by contributing to causes greater than themselves. Buffett once said, "If you're in the luckiest 1% of humanity, you owe it to the rest of humanity to think about the other 99%. That's not a moral lecture. It's a reflection of wisdom. True fulfillment comes from using your success to make life better for others. Giving back doesn't have to start with millions. You can begin with small, thoughtful actions. Donate a few hours of your time. Share your knowledge freely. Help someone start their journey. When you invest in people, the returns are invisible but profound. They come in the form of gratitude, respect, and the satisfaction of knowing you made a difference. These are returns that compound beyond any market growth. Moreover, giving back keeps you grounded. Wealth can easily make people complacent or arrogant. But generosity reminds you of where you came from and why you started. It reconnects you with the real world, the people, struggles, and values that matter most. It turns financial success into human significance. Without that, even billions can feel empty. There's also a practical dimension to generosity. When you mentor others or contribute to your community, you expand your network, sharpen your understanding of people, and discover new opportunities. Many successful entrepreneurs say their best business ideas came while working on social or charitable projects. Helping others broadens your perspective. It allows creativity and innovation to flow naturally because your motives are rooted in purpose, not just profit. Think of giving back as a spiritual investment strategy. Every act of kindness increases your emotional wealth. Every contribution reinforces your self-worth. Every shared success strengthens the fabric of society. You don't lose when you give. You grow. You grow in humility, wisdom, and gratitude. The best investors understand that wealth is a tool, not a trophy. It's meant to create progress for yourself and for others. When you use your knowledge, influence, and resources to uplift others, you are not only shaping a better world, you are ensuring your legacy outlives your portfolio. As you continue your investing journey, remember this simple truth. The ultimate return on investment is the happiness and growth you bring to others. Money can build comfort, but generosity builds meaning. And this leads us to the final chapter of this book, the one that ties it all together. Because at the end of every journey, whether financial or personal, the goal remains the same. Freedom. Freedom to live, to grow, and to give. In the next and final part, we'll explore how to carry this mindset forward. How to make your journey as an investor not just successful, but truly limitless. Epilogue. Every great investor eventually realizes that wealth is not a finish line. It's a continuous journey of learning, growing, and giving. The market changes, technology evolves, and new opportunities arise every day. But the principles you've built through this book, the mindset of patience, discipline, curiosity, and generosity will remain timeless. Becoming a modern investor is not about chasing trends or timing the market. It's about mastering yourself. You've learned that investing isn't just about money. It's about building habits, understanding value, and making decisions that serve your long-term vision. You've seen how knowledge compounds just like capital, how patience multiplies results, and how emotional control separates the wise from the reckless. The truth is, there will never be a moment when you arrive. Markets will continue to move up and down, your goals will evolve, and your understanding will deepen. That's the beauty of it. The modern investor is not someone who stops learning after success. They keep learning because they know success depends on constant growth. Even the greatest minds in finance, Buffett, Munger, Lynch, and Bogle, never stopped refining their ideas. They read, observed, adapted, and stayed humble. You should too. Let every investment teach you something new. Let every mistake sharpen your perspective. Let every success remind you of the value of patience and persistence. And remember, freedom, the kind this book is aimed to guide you toward, is not simply financial. It's the freedom to choose your path, to spend time as you wish, to create, to contribute, and to live life on your own terms. Money alone cannot buy that kind of freedom. But a wise, disciplined investor can earn it through clarity, self-control, and long-term vision. Use your wealth wisely. Let it fund your dreams, but also let it empower others. Build businesses that create jobs. Support causes that align with your values. Educate others about what you've learned. This is how wealth transforms from numbers into legacy. As you close this book, remember, this isn't the end. It's just another beginning. Your next investment decision, your next lesson, your next act of generosity, all are part of a greater story that never truly ends. Because being a modern investor isn't a title you earn once. It's a way of life. It's the daily practice of thinking clearly, acting patiently, and living purposefully. So keep learning, keep growing, keep investing in the market, in people, and most importantly, in yourself. The journey never ends, because the true reward is not just the wealth you build, but the person you become along the way.